Founded in 2016 and headquartered in New York, Owl Rock Capital Corporation, ticker symbol ORCC, is a specialty finance and business development company that provides direct lending solutions to US middle market companies. Owl Rock is managed by Owl Rock Capital Advisors, part of Blue Owl, a direct lending platform with $71.6 billion of assets. Owl Rock Capital Corporation portfolio consists of investments in 187 companies with an aggregate fair value of $13.2 billion. Normally I would compare how the stock has performed against the S&P 500 since Owl Rock only started in 2016 and the anomaly of COVID. It would not be a fair comparison. I did a quick check to see what the rate of return would be if you'd invested $10,000 since it started paying dividends and reinvested them. So just under 4 years, you would have an average annual return of 7.21% and a total return of 31.66%. Plus the value today would be $13,165.89. A decent return. The high yield plays a big part of this, allowing you to acquire an extra 334 shares from the reinvested dividends. From the total shares of 979.62, this would give you $323.27 a quarter and $1,293.98 annually. This does not take into account special dividends. So let's check out the dividend history. It only started paying dividends in August 2019, starting with a bang at 44 cents. It then continued with regular quarterly dividends of 31 cents, with some nice bonus special dividends in between. If you're an owner of Main Street Capital Corporation, you will be well aware of special dividends. Special dividends are a one-time cash dividend payment that companies make when they have unexpected cash on hand. As we scroll up, we can see that the special dividends are frequent, which is great to see. Only one regular dividend increase in January this year, taking it up to 33 cents. But we can see the special dividend amount reduced, so no gains so far this year. If we look at the financials, Owl Rock's market cap is currently $5.31 billion. The payout ratio is 80.5%, which although seems high is actually a requirement. Due to the tax structure, it's required to pay 90% of its income to shareholders through dividends. Revenue fluctuates. 2021 was their best year, a drop in 2022, but still their second best performing year. If we switch to quarterly, we can see that it's had a good start to the year as well. EBITDA has been great the last 2 years, free cash flow positive for the first time, which is very good. Net income and EPS follow the revenue pattern. Cash and debt is to be expected as the company grows and adds more companies to its portfolio. 98% of their debt investments are on a floating rate, meaning that if the interest rate goes up, they will receive higher interest payments. Dividends again we've talked about. At first glance it looks like it's all over the place, but these are special dividends in between the regular ones. Shares outstanding, minor increase. Since this is a newish company, this is to be expected. I'm not particularly worried about this. Expenses increasing to be expected as well as the company grows. If we have a look at the Q1 earnings this year, some highlights. Net interest income of 45 cents a share exceeded the first quarter dividend of 33 cents by over 35%, the highest quarter since inception. Dividends for the first quarter were 39 cents per share. This includes a special dividend, which represents a greater than 10% annualized yield. Return on equity of 12.1% in the first quarter is up from 8.3% the prior year, plus net asset value per share has increased. Now, what do analysts think the 12-month price forecast of the stock price could be? CNN Business have an average 12-month price target of $15, 11.1% upside from where we are today based on 11 analysts. TipRanks have an average price target of $14.46, 7.2% upside from where we are today based on 7. And Zacks have an average buy price of $14.44, 7.44% upside from where we are today based on 8. Let's have a look at the stock price history. We can see the full history quite easily. After the initial buzz from its IPO in 2019, it hit a high of $19.13 in December, before a drop-off, and then COVID hit, which caused a further drop like the majority of all other stocks. After a recovery, it's been sideways for the last few years, and some minor ups and downs. The stock price had a 52-week high of $13.88 and a low of $10.18. Analyst 12 months price targets are above its 52-week high. If we go over to value investing, Using the dividend discount model, a fair price would be $15.27, which is 13.6% upside. With a margin of safety at 20%, a good buy price would be $12.26, which is very close to where it is now. I think RROC has a lot going for it. The stock comes with its risks, like if clients default on their loans. You are rewarded for this risk with its high yield of 9.79%. There are not many stocks that offer that sort of yield. Okay, thanks for watching. As usual, if you've enjoyed the video, please like and subscribe.